At the tone, please record your message.
Welcome back to Roxum TV and also welcome back to Jam Crypto. Whichever platform you're watching on, I hope you guys are hanging on tight because Bitcoin dropped below $90,000 and it was a really scary time ahead. Seems like we do have the confirmation of bear market and so much bearishness going on. And today, because you know the gist, I like to start with a little bit of TA. I like to start with the number and data and really look at the chart where Bitcoin might be heading to in this bear market. And basically, how low can we go in this bear market? So we're going to start with that, but we're also going to dive into a little bit of news because today I'm bringing you full on Donald Trump news. he is creating so much noise. Well, because he is simply the most powerful person in this planet Earth. But like, he is creating noise about that $2,000 dividend because some people tend to think that that is the actual check they'll be receiving. So that would be a good news, right? But turns out the chances of American people getting an actual check might be very slim because simply the US government doesn't have that much amount of money to pay out like billions of dollars to all the eligible American people just to get $2,000 check. So we're going to look into the what's the deal with it, and the RSI is going to tax your crypto. This is right now being reviewed by the White House. So is that proposal going to pass? If so, this is a lot of bearishness for the market as well. Yesterday, what I've seen is a OG project. So it's called DappRadar. I'm not sure how many of you guys would used it before, but like I personally, I've used it back in 2021 for some NFT trading and basically just use it for research and look at some data. So I used DappRadar before. And what's surprisingly and what's shocking is that yesterday we have the news of DappRadar shutting down. And this is an OG project, and this is a project that has been around for 7 years. Only today is adding a lot of fuel to the bear market. Right now is not looking great. We know the confirmation, like how we could determine this is a bear market, is that if we have Bitcoin, like Bitcoin's weekly candle close below the 50-week moving average, then that's the definition of a bear market. We are halfway there, but I'm calling it early. Well, I think I'm one of the earliest influencers to call this because it's not only the 50-week moving average that we need to pay close attention. We also have the death cross. We also have the RSI divergence. And more concerningly, the RSI support trend line on the 2-week Bitcoin is also dropping, below the support line on the RSI. So without further ado, we're going to dive in because that's a lot to go over today. What we're going to do is to start with the daily chart of Bitcoin. So right now, Bitcoin is hanging on tight, sitting at $90,000. And I love how TA is basically warning us because I am a person who believes narratives follow price, and looks like data and math like to warn us before there's some narratives to catch up, like some news to catch up about this. Because I have been bearish ever since we made that all-time high at 126K. That was 6th of October. That was more than a month ago. The reason why I was bearish is because we are forming this general downtrend. And even we pumped to, so for example, 27th of October, we pumped to 115, close to $116,000. People were really bullish, and especially on-chain. Because one thing I learned from this market is the on-chain analysis. We do need to adjust that measurement a little bit. One thing about on-chain is that we kind of don't take the diminishing return into account. And this cycle, even with the peak indicators, like the most popular 30 indicators out there, none of that indicators were flashing. So none of that was telling us that we are near the end of bull market. So for TA is working surprisingly well. So that's why I'm sticking with TA for now. So we were in a general downtrend. Like even like I won't be surprised to see Bitcoin pump to even close to $103,000, and then we get rejected again. Because like whenever we pump, there's so much like back and forth narrative. When we pump, people on Twitter, they'll be like, okay, we're so on, like because on-chain is showing blah 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 blah. But like, I'm afraid to break it to you, like TA-wise, from a T perspective, looking at the chart, if we don't get a daily candle actually close about this downtrend, like we are not out of the wood. And so far, I have like most of the boxes for a bear market has been checked. And just bear with me. So this is the general downtrend I have been talking about. If we get rejected again, I'm afraid to break it to you, we're just going to head lower and lower and lower. But like how low will we go, right, Jamie? That's the question we're asking here. All right, so how low can we go? We were breaking the major region. So I drew this rectangle. So this is a region between 89K to close to 91K actually. So this is a region I'm eyeing very closely because we have a lot of data point touching this region. So we touched this region for roughly 3 times, roughly. Okay, we're on a daily chart and roughly we have like candles touching this region. So this acts as support. So prior support is going to be our resistance right now. And if we lose this, the next support region that I could see, like we have to zoom all the way out. And then we will see that we have another region that is between 71K to 73K. So in other words, if we lose this, like I'm not seeing much support around here. So it will be like a free fall before we have another major support kicks in. The reason why I drew this is because if we zoom out all the way back to March 2024, and we have been trading inside, so somewhere here, so we have been trading inside and constantly get rejected at this region for 238 days, somewhere around that. So this is a level I'm watching very closely as well. And because prior resistance is going to be our future support, looks like if we lose here, this critical level of 89K to 91K, then it's going to be a free fall before we find our region again. So this is what I see from the daily chart. Let's actually remove the drawings and let's hop onto the weekly candle. So slowly to build up that time frame and see how low Bitcoin can go. All right, so the downtrend is still intact. Like I won't be surprised if we see a pump. So let's go ahead and pull out the 50-week moving average. So here we have 2 lines. So the blue one and the red one. From a higher time frame, these 2 lines are the one that we're going to pay the most attention, like a really close attention to. So for the weekly candle, we know that last weekend we closed below the 50-week. Technically speaking, we need 2 weekly candles closing below that, but because there are so many signs, so many books already checked, I'm already calling it a bear market. So for this week, of course, we're going to close over the weekend. So we have a new candle actually next Monday. This week is still early, but like I won't be surprised if we have a pump and trying to reach 102K, which is where 50-week moving average is sitting at. So if we reach that and if we get rejected again, I'm sorry to break it to you, is another that cat bounce. Because I keep talking about there are 3 groups of people in the market. So first group is that the all-time high already happened on 6th of October. The second group is that maybe the all-time high going to happen in Q4. So either November and December, but the chances become very slim right now for the second group because like so today is 18th of November. That means we only have 6 more weeks to go before year end. So the time is very limited for recovery. It's not impossible, but I would like to see if Bitcoin managed to break out of this. Like, first of all, we have to reach the 50-week, close above the 50-week, and we actually break above the trend line, so the overall downtrend. And that is like well, let's see how much percent we have to pump. So it's around like 14%, 13 to 14%. It's not impossible for Bitcoin's terms, but like the time is very limited. So the chances of us seeing the cycle top ready being 6th of October increased drastically. I'm saying like 70 to 80% that we have already seen the cycle top. And as for the third group of people, because like there are a bunch of people who think that Bitcoin's becoming so big as a macro asset, and there's so many narratives to come. For example, QT is going to come to an end on exactly 1st of December. We know whoever replaced Jerome Powell, he's the person going to be very dovish, so he's gonna cut rates drastically. So that's a lot of tailwind, but until it's actually reflecting on my charts, I'm sticking with what's whack, because right now, what it seems like is the 4-year cycle is being so intact. And one thing I noticed from the weekly chart, so this is actually some good news for you guys, because I have been talking a lot of bearishness, but here's the good news. This cycle, it is different in a way because retails weren't fully back. And when retails weren't fully back, we haven't seen the euphoria stage that we've seen in the previous 3 cycles. What this means is that if we zoom all the way out, well, actually, let's use this chart instead. So if we zoom out, we have 3 data point here. This is the 4-year cycle. So how we calculate the cycle top is basically taking the cycle bottom to the cycle top, and we get this magical number of 1064 days. So that's how we know 126K was the all-time high. And the previous one, that was back in 2021, we reached 69K, and the previous one back in 2017 was 19K. So anyways, the reason why I want to mention this, okay, we know that we are heading for a bear market. I'm not scared of bear market because bear market is when you make generational wealth. But what's the good news here is that when we reach bear market, when we're heading for bear market, usually Bitcoin would like to go to its 200-week moving average, and that's the case back in 2017 till 2018. It lasted a year. So that means, well, from the cycle top to the cycle bottom is a 84% reduction. So that was painful. Yeah, I mean, I have a lot of respect for the OG back in the days for hodling Bitcoin all the way from 19K to 3K, basically, until we reach the 200-week moving average. So that's what happened back in the day. So back in 2017. And if we take a look at the previous cycle, so previous cycle, we reached 69K before we found the cycle bottom. And like last cycle was so painful because not only we reached 200-week moving average, we actually went below 200-week moving average, and that was a really scary time because like if you guys had the guts to ape into Bitcoin to scoop up Ethereum and Solana, because this cycle was extremely scary. We have like FTX collapse and all these like Silvergate and banks collapsing. So during this time, it was extremely painful, and we actually went below the 200-week moving average. So props to you if you're watching this show. Like you guys are being extremely early, and if you hodl through thick and thin, like you deserve to, yeah, take some profit or do whatever you want. All right, so point being, if we take this measurement, so cycle top is 69K. So if we take this and we go to the cycle bottom, that is a 78% reduction from cycle top to cycle bottom. So what we are seeing is that the the reduction, the correction is actually getting smaller. So here we use the 200-week moving average, and here we went below the 200-week moving average. But like if we, okay, just like some assumption out there. So if we use the cycle top and use the 200-week moving average instead, that is still like a 73% reduction. So like if you think about that way, it's not like too horrible. So point being, the correction is getting smaller. So let's zoom out. So let's come back to the current period. So the current cycle right now. Okay, if we take this cycle top and if we use the 200-week moving average, one thing very interesting and one thing we notice is that it's just like a 55% reduction. I mean, it sounds crazy, like Jenny, what do you mean? It's just a 55% correction, but like we're in crypto and this is Bitcoin and Bitcoin is still extremely early. And if you compare that with traditional asset, Bitcoin is still a baby. So a 55% reduction for a bear market, I mean, I would take it. That's a good deal. So point being, previous cycle, from the cycle top to the 200-week moving average is 73%, 74%. And back in 2017, from the cycle top to the 200-week, wait, let me zoom, go further. Okay. So back in 2017, we take the cycle top to the 200-week moving average. That's a 91% reduction. I mean, yeah, I mean, it's maturing. Point being, this market is different because we haven't seen retails actually kicked in. We haven't seen the euphoria stage that we look forward to because people have so much expectation. We know institutions are kicking in. We know they have been buying out bags, so institutions buy out bags instead, and countries are buying out bags. So one thing we notice is that big money's smart, so-called smart money, they aped in, but retails aren't here. So we didn't see the euphoria stage. But this is actually a good thing. That means the bear market wouldn't be as painful or as severe as any cycles that we have seen before. Maybe instead of expecting a 70% or 80% reduction, maybe this time we're just going to expect a 50% reduction for the bear market. And how we know when we reach the cycle bottom, so when exactly we're going to bottom out, using the 4-year cycle. So if the 4-year cycle has been so intact, we know that, okay, we have 3 data points here. And we know that from the cycle top to the cycle bottom is going to last like 365 days, something like that. So if we use that metric, and since the all-time high happened on 6th of October, so 365 days. So that would take us around 5th of October 2026 next year. So there's still a lot of time to, if you guys want to take profit, or if you guys want to wait around for Bitcoin to reach 200-week moving average. Of course, it's not financial advice, but like my own strategy, like I'm sticking with the TA and what I see in the chart instead of some narratives that we think, we feel we might happen. Because like the markets don't care about our emotions. The market, like we just have to trade with what we have, not trade how we feel. All right. But like this is a good news. So like the bear market is not going to be as severe, it's not going to be as painful. However, I know viewers of Jam Crypto, you guys are a little bit degen, perhaps more degen than I am. So you guys are really into altcoins. That's some bad news for you guys. So here we have the Toto 3. So we are looking at the Toto 3 market cap. So Toto 3 is, of course, the entire crypto market cap, exclude BTC, exclude Ethereum. And right now we're sitting at $894 billion in the market cap. And it doesn't take a genius to figure out that it's a bear market. And we are again closing below the 50-week moving average for the entire altcoins market. We touched the 50-week quite a few times. So that's another bearishness. So it's showing weakness from what I see. All right, so as for the altcoins, it will continue to bleed. And I do think it's going to bleed even harder. So good luck for you guys holding altcoins out there. I sold a bunch when I saw the signs from my chart, so from my TA. So TAs actually saved me quite a lot. All right, so altcoins wise, one thing I noticed is this bearish divergence. So this bearish divergence, we have been forming that ever since March 2024, so a year and a half. How do you see this? So we are seeing the top from the RSI, and we see the price, so overall the market cap is going up, while the RSI is signaling a bearish momentum. So this is not a good news. And we know in a bear market, usually liquidity would go back to BTC. So instead of alt season, what BTC would do is to suck up all the liquidity from altcoins, and all the money would flow from altcoins to BTC. So I do believe BTC dominance gonna rise, and I do believe the Toto 3 market cap, there is more correction to do. So looking at this chart from altcoins, I do think there's a more reduction. So right now we're sitting at here, but I won't be surprised in the bear market. Same for BTC. So altcoins would go back and reach its 200-week moving average, and right now it's sitting at roughly 600 billion market cap, so $600 billion. All right, so from here, that's actually another, let's see. So another 33% correction for altcoins. So altcoins really gonna feel the pain. And right now, I sold a bunch of altcoins, and holding Bitcoin through a bear market, I have no problem doing so. But altcoins, we know 99% of project gonna fail. So for the next cycle, I don't have convictions that a lot of these altcoins that we've seen today will actually be around. And we actually have an example from DappRadar. We of course gonna dive into the news, but like, it was so shocking because DappRadar, it is a really good tool. It is a really good website for research and stuff. And it was a really popular website for, especially back in days like during 2021 NFT mania. But like altcoins, I believe gonna continue to bleed. But let's also take a look at the DXY, because DXY, one thing I noticed is that we formed this support trend line, and we are still holding above the support trend line, which is not good. And another bad news is that looks like the DXY is breaking its resistance at $100. And we know DXY and BTC, they have an inverse correlation. So when DXY goes up, usually BTC goes down, and so for stock market. Because the thesis is quite simple. If you see the US dollar is rising in value, you might as well just hold USD. Like, why would you just take on extra risk just to buy some internet money, just to buy some so-called risk on assets? So that's the negative correlation, about like negative 0.7 correlation for DXY and BTC. And looks like we're breaking $100. Yeah, more pain to come in both altcoins and BTC, or even perhaps the stock market as well. All right, so let's actually hop onto the 2-week chart as well and really build up that time frame. All right, as for the 2-week chart, one thing I notice is, of course, like, actually, let me remove all the drawings. So one thing I mentioned to my community is we have this like rising wedge, and right now we are breaking out of this rising wedge. And how we confirm this rising wedge is we have like essentially like the main touching points. And since we are using the 2-week chart for BTC, we are looking at a even higher time frame. So rising wedge, we have 5 touching points. So here, here, here. So 1, 2, 3, 4, 5. This is a bearish pattern that we are forming here. I mean, it's really rough, but I'm sure you guys know what I mean. And we are right now trying to even reach the 50 moving average. Again, we are on the 2-week candle, so that's some bearishness. The 50 moving average right now is sitting at $83,000. And not only this, if we also pull up the RSI, so why I didn't have the RSI pull up, I don't know why. Oh, it's actually up here. So RSI, if we actually pull up the RSI, one thing I noticed is the rising support trend. So we have been forming this support ever since 2023. And what happened until recently is that we broke out of this RSI support, which is extremely bearish. Last time this happened, we enter the 2021 prolonged bear market. So again, not good news. So yeah, is history going to repeat? Looks like so, because I trust my TA and I trust my data. So yeah, we break out of this like rising support on RSI, and we are approaching the 50 moving average on a 2-week chart. We also have a daily chart depth cross. And as for the 2-week candle, it's only 6 more days before we close this weekly. I mean, this 2-week candle. So yeah, time is limited. If we don't see an all-time high in December, that means the 4-year cycle is so intact, and we likely 2026 is confirmed bear market. It's going to be extremely boring, chops around, consolidation. So yeah, a lot of bearishness I'm seeing from the chart, but I haven't I haven't even started with the news yet, because when it comes to the degen play, because like degen loves to trade on leverage and getting liquidated, and looks like it's not doing any goods in the market. Of course, we're going to look into some of the degen example, but before we do that, let's actually take a break, because there's a lot to digest, like so much data and numbers. So let's take a little break, and after that, we're going to look into some degen news, and also what Donald Trump has been doing, causing so much confusion in the market. And I'll see you guys in a bit.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Alright guys, welcome back. As I promised you before we hit on that little break, we're gonna now take a look at some degen play and perhaps we could learn a thing or two. Well, the best lesson I learned from these degens is that it's best to stay away from leverage, especially for the time being. There's so much volatility, and we are seeing billions of dollars being wiped out in the market in a 24-hour basis. But let's take a look at one example, and this actually happened over the weekend. So let's hop on to the news of like this degen we're looking at. So $168 million. So this happened over the weekend. He is a high stake so-called trader, described in reports as a full-on degen gambler. He was being liquidated $168 million on Hyperliquid. Here's the setup. Like Bitcoins was crashing through like 90K. This trader decided the market would keep falling. They doubled down again and again, opening massive shorts across multiple tokens, but the market actually bounced instead, like the tiny bounce, and that rebound instantly wiped out the entire position. And the liquidation is, of course, not small. It triggered like a $200 million wipe out across Hyperliquid, marking one of the biggest single event degen blows up this year. So who is this degen? Why is it losing so much money? So this degen, of course, he's a whale. Like, otherwise, why would he have millions of dollars just to play around? And he has a history of gambling through crypto casinos like Stake and Robat. So those are the really popular websites, and he has been gambling. There's like a pattern of gambling style behavior. It's not investing at all. However, like the wallet is dogs, but there's no links to any like famous traders or influencers on Twitter. He behaves more like a casino addict with a whale-sized wallet. Except the casino right now is Hyperliquid. So if you guys want to track, this is his wallet. So you can see he still have some positions open. So he still have the perp. So he's shorting SATEC. On Hyperliquid, he lost $5.5 million in a matter of 11 days. He constantly added shorts every like 1 to 2 minutes, like he's playing some slot machines. There's no major profitable trade reported. And basically, we just call it a speed running bankruptcy. So a true degen, not a trader, I would say. After he blew that up on Hyperliquid, he actually switched to GMX, which is again another decentralized exchange. And GMX is actually doing great. So he moved to GMX Arbitrum. So you guys want to track it, it's actually the same wallet, but using the same different chain, right? So it's not available on Arkham. Like the profile doesn't really exist yet, though I think it's going to come very soon. So after he lost $168 million, like most people would log off, right? Get really frustrated, but not this person because he's a full-on degen. Like he immediately opened a $115 million of short on Bitcoin and Ethereum on GMX. And right now it's actually sitting on a profit, so a unrealized profit of $1.4 million. But the liquidation risk remains really high if Bitcoin is squeezed. Again, as I mentioned from the TA, it's very possible we get like a dead cat bounce. And usually bounce like that is when huge liquidation happen. Like their positions are so large that another liquidation could hit. So another multi-million dollars caused by this degen again. And this person actually remind me of another really famous trader. So I'm sure you guys have heard of the name James Wine or James Win. I think it's pronounced Win, right? Because he's trying to win. But he was doing the opposite. So he has the name of the Hyperliquid villain. This degen, he lost like he was once up $82 million. And then he kind of lost it all. So here, as you can see, he hit like 12 more liquidations in 12 hours as market rebounds. After 45 losses in 2 months, one winning trade wasn't enough. He kept adding and lost again. His balance is now 6K. Overall P&L is down $22 million. And a win rate is about like 30% because he did win make time. So $82 million was not like was a lot of money, but is he gambling on his own luck? Because he's known for doubling down until he explodes. Like he lost $100 million long BTC at the top earlier this year. So compared to this another degen that we have here, like I would say same style, same recklessness, and maybe James Win, okay. James Win have more total blows up, but the gambler's $168 million single wipeout is larger. So this is one degen we have to take into account. Another one is none other than DappRadar. So if you guys didn't know, he's a really famous trader on X. So his real identity is actually a Taiwanese singer or some NFT whale. He made his reputation from NFT trading. He's known for like high leverage Ethereum longs as well. But overall, like I couldn't keep up with all these up updates about Matchy Brother anymore because he just keep getting liquidated. It feels like, okay, November alone, he lost close to $16 million in November alone. And this is only like the third week of November. And include like a $3.6 million Ethereum liquidations and some Uniswap loss as well. He reopened 25x Ethereum long worth around like $9.5 million, and right now it's sitting at huge loss. Liquidation price is like, again, like, because he is pulling in trade. Like if he lost, he's gonna deposit another 256k USDC on Hyperliquid. Like he keeps longing Ethereum because he has high conviction. But again, like right now, it feels like it's the addiction. So it feels like he is mad trading, revenge trading. So that's the word. It feels like he's revenge trading, trying to win his loss, and he has so much conviction from Ethereum because that's how he made his money. Like these two degen trader. So this guy is betting that the market would go down, so he's shorting the market. While Matchy Brother is taking on a different direction, but yeah, I mean, there is a chance that they will both get wrecked, actually. But I think the funniest out of them all is actually James Wynn, because he was the one actually begging for donation at one point on crypto Twitter. So that's extremely funny. And this guy is a legend, a degen as well, like winning 80 something million dollars and lost it all and back money on Twitter. So yeah. One thing I learned is that like during markets like this, all the volatility, just like I'll try to stay away from all the leverage. And what TA has taught us is that, okay, fundamental analysis would tell me which asset to trade. Like BTC has a really strong fundamentals. Like despite we're heading for a bear market, I have no problem hodling or even aping to buy BTC because I believe in the fundamental. While TA, it tells us when to trade a market, when to exit, and maybe we're seeing too much risk in the market right now. So it actually makes sense to take some profit off the table. So that's how TA works. And using TA actually saved me a lot because like we know 6th of October, there's a potential thesis that is going to be cycled up. Like before that, I pull out all the leverage. So thank God I know some TA, otherwise I'm going to lose big time. All right, so that's some degen. Another news we are moving to is Donald Trump. So he promised a 2,000 tariff checks. So there is so much confusion going on. And even speaking to American people, like some American people tend to think there's an actual check being written by the government. So the news actually broke I think 2 weeks ago, last week or 2 weeks ago. So Donald Trump posted on Truth Social that he wants to send American $2,000 tariff dividend funded by money collected from tariffs on imported goods. He repeated the promise again on 17th of November, so yesterday, saying checks would arrive by mid-2026 and probably the summer. The way Donald Trump framed it is really simple. So tariffs was paid by foreign countries and money goes to the US Treasury, and US government sends American people $2,000 each. But Scott Bessent is of course the Treasury Secretary. So he paint a more complicated picture. Like some of Trump's, like something is wrong with the lighting. It's just like keep flashing. So if we could fix that, it keeps changing color as well. So for Scott Bessent, he paint a more complicated picture. Like some of Trump's claims conflict with fiscal reality, and many pieces of the plan require congressional action. So here I kind of want to offer more perspectives what actually going on, what the proposal actually is, and there's a lot of contradiction. Because I'll just share what we know so far. Trump calls it a dividend of at least $2,000 per person for non-high income American people. They targeted is going to roll out in mid-2026, while White House say they're exploring legal pathways to enable payment. So who would get this so-called $2,000 check, right? So high income people, of course, excluded and clear cut off. But anyone actually believe that would happen? That's because I personally do not believe this would happen. First of all, there are two reasons I do not believe he's going to go along with the whole plan of $2,000. So we could look at Polymarket because Polymarket is usually spot on with predictions like this. So will Donald Trump create a tariff dividend by 31st of March? So the chances is lower than 10%. And we know Polymarket is usually right. So this is one of the reasons that I do not think they're going to go along with the whole thing. Like Donald Trump said it's a check, but nothing is confirmed. It could be like a tax rebate or it could be a broader tax reform package. Legal experts note like Congress must authorize new payments. This cannot be done through emergency powers used for COVID-era stimulus. So there's also a contradiction between Donald Trump and Scott Bassen, because Donald Trump is trying to, you know how he is. He likes to hype up everyone, especially like to hype up America. So he likes to say it's a direct check, $2,000. So take it, people, we could go spend it. So that's how he frame it. That's why there's like so much hopium, a lot of excitement in the market last week. But Scott Bassen, how he presented it, like he's saying he's more sensible because the plan may need congressional approval. Payments might be in the form of larger tax reforms, not like a standalone checks. And tariff revenue alone may not be enough. So why I would say I don't think it's gonna go along with the whole thing. Because like first, Polymarket, I'm going to take into account Polymarket because it's really accurate. Second, it's just some simple math problem. Okay. We know for tariffs, who are paying most of tariffs is actually American businesses. And so far, if Donald Trump gonna make the payment for $2,000 per American people, like eligible American people. So if Donald Trump were to make the dividend payments available to anyone earning $100,000 or less, the policy would reach about 115 million Americans. So amounting to roughly $300 billion in dividends. And as of 30th of September, the federal government had generated $195 billion in tariff-related revenue. So using this simple math, the estimated $300 billion cost of dividend check proposal would far exceed the amount of currently available tariff revenue. So no, like I don't think they're going to go along with the whole plan. So that's why there's like this connection between Scott Bassen and Donald Trump. So Donald Trump wants to make headlines. So he always start with a bold statement. So we're going to do this because like America is the strongest and the best company in the world. And we're going to make America strong again. Well, Scott Bassen wants something like Congress to actually pass this. And he is basically bringing sense to the market. Like, please don't expect it's going to be an actual check of $2,000. And yeah, does Congress need to approve it? Of course. Tariff revenue currently flows into the general treasury fund with no legal mechanism to convert it into dividend. So Congress must pass a new law. But looking at the math right now, it's not adding up. So I don't have much convictions. And as for Donald Trump, one thing I find it really smart for him to say is that how he claimed that foreign businesses, foreign countries are paying for tariffs, but if we actually look into the data, look into the numbers, actually US businesses. So I would say he's really smart of framing the whole thing. Tariffs, it acts like a hidden tax on American people, on American businesses, because we know America is an import country. They have to buy, they are not producing enough inside their own country, so they have to buy. But foreign countries aren't paying. US businesses are paying instead. So it's politically brilliant, it's really smart. It's very different from Biden's administration because during the campaign, Biden, how he would present is a lot more direct. So we are raising the tax, we are taxing more money on American people. While Donald Trump, he's a little bit more sneaky with the whole taxing because tax, it doesn't sound like a positive word, especially for American household, for regular household or even businesses. So he kind of think of another word that would replace tax. And here comes his tariffs, and he actually is a really brilliant idea how he frame it as taxing foreign countries and end up is just taxing local American people. So anyways, as for this, well, let's go back to the 2000 check. So more likely, if they're going to go along with the whole thing, it's going to tie to a tax credit or tax rebate. Less likely it's going to be a literal $2,000 check funded only by tariffs. So it could arrive in 2026, but if we look at the odds on poly market, so right now it's actually March 2026, it may rise. But yeah, I'll give it to that. It's a very clever narrative from Donald Trump. The tariffs, and they're going to use the revenue and they're going to send the checks to American people. The math doesn't add up. And they are taxing American people, not foreign businesses. So do watch the Congress closely in early 2026. That's when we know if this becomes law or it stays a campaign style promise, because that's how politics work. All right, let's also hop on to more Donald Trump news, because this is actually a really bearish news. I won't say this is bearish per se, but is sending a lot of negativity to the market. As of yesterday, the Trump administration is actively reviewing a major IRS and Treasury proposal that would allow the US government to access Americans' foreign crypto account data. This plan would force foreign crypto exchanges and digital asset platforms, including those outside US jurisdiction, to report US users' identities, balances, and transaction histories directly to the IRS. This is similar to how foreign banks must report data under the FATCA, so Foreign Account Tax Compliance Act, but now they extend it to crypto. So here are some key points. The review would begin the review actually began in early November 2025. So this year, the proposal was sent to the White House OMB for evaluation. So that could actually take effect as early as 2027. So, of course, there's a lot of backlash. When I say a lot of backlash, it's so much negativity on crypto Twitter because people didn't take that too well. If we actually scroll down and look at the comments, let's read that out a little bit, right? So, Donald Trump being elected, I'm basically going to abolish the IRS, and Donald Trump 1 year into his term, I'm allowing the IRS to install cameras deep inside your assholes. So here's another one. So IOS trying to sneak my foreign crypto like there's anything beside dust and disappointment. Okay, this is a funny one because altcoins is actually losing a lot, and so is Bitcoin. Like Bitcoin is technically heading to a bear market, and so Rex Spector is saying that how can Donald Trump claim to support crypto while his administration evaluates a policy that expands IRS access to foreign wallets? So much negativity on crypto Twitter. Like if you guys want to read that, like just it's a lot of really funny comments. So let's take a step back because I feel like American people are taking this like, okay, the government gonna tax my crypto money as of tomorrow. But let's take a step back and what's actually inside the proposal. First of all, this is not a new tax. So Americans already owe tax on all crypto gains worldwide. This plan is about enforcement, so it's not new rules. Why does it exist? Millions of Americans use foreign exchanges, so Binance, Bybit, Maxine, just to avoid IRS oversight. And the IRS believes billions in crypto gains go unreported every single year. So how the rule works is if being adopted, foreign crypto platforms would need to report the name, the address, the tax ID, account balances, all the money in and out basically. And the threshold, it could be as low as $600, matching the new US reporting standard. It also covers some DeFi platforms if they have custodian elements, for example, like bridges, front end, smart contract controllers. So this actually started during the Biden administration, and right now it's being reviewed by Donald Trump. This proposal actually aligned with Donald Trump's fiscal goals, so he wants more revenue, but of course, there's a lot of contradictions. So it's like is conflicting with his public crypto-friendly image. So is this a tax on Americans' crypto? Not yet, but it feels like we're heading to one. The IRS already tax worldwide crypto gains. What changes here is the IRS ability to enforce it. So who gets affected the most? Here is the American people who use foreign exchanges like Bybit, Binance, OKX, etc. This is most damaging for people who hide offshore gains and don't report staking yield as well. So this might actually be the first step of taxing more crypto, taxing your gain. Users holding large offshore crypto may owe back taxes, and IRS could issue audit penalties up to 75% or charges for willful evasion. So yeah, people don't like that, and you just have to read the comments on Twitter and you'll get the idea. Can they actually enforce this if crypto is decentralized? So, well, since it's decentralized, so if you're using DeFi and stuff, of course, they can't track it if you're using self-custodian wallet or P2P trading. But there is always some DeFi loopholes, like fully decentralized protocols can't be forced to report, but most users will eventually touch a centralized exchange because they want to on-ramp or off-ramp, they want the fiat back. And when they use a centralized exchange, there is usually a KYC breach. So that's actually a choke point. Do I like this? Well, no, but is it actually here already? No, like it takes time. So the final version could apply to 2027 tax filings. There are 50% likelihood they're going to actually go with this plan because it actually fits the global trend. Like dozens of nations have already signed on this like CARF, including G7 members, so Japan, Germany, France, Canada, Italy, and UK, plus crypto heavens like UAE, Singapore, and Bahamas. So maybe the likelihood increased because like all these companies, all these countries are in already. But let's see if Donald Trump gonna resist that, because he has a really pro-crypto image, and doing so, like going along, especially this was under Biden administration, it's not gonna look good on Donald Trump's image. But a more realistic outcome is that the rule likely pass in modified form. Maybe there's exceptions for like US mined Bitcoin or small balances or certain stable coins, but at this stage, we're pretty much just guessing. So if we get more developments about like, is this going to turn into a new tax law, then yeah, we're going to let you guys know as soon as we get more updates. All right, let's also move on to another Donald Trump news. Like today is actually full of Donald Trump news. I don't know why he's causing so much noise and confusion in the market. And here is about some mention. Well, it's not mention, but resort. Okay, resort, that's the word. So what he announced is this Donald Trump International Hotel Maldives. It's actually, okay, the Trump International Hotel Maldives. It will be built with a London-listed Saudi-backed developer. The resort will include around 80 very high-end overwater beach villas. So I think there's a picture. So there you go. Right, is that the actual villa? I think so. All right, so very high-end, located 25 minutes from Mayo by speedboat. The planned opening is late 2028. This project is special because it will use LWA, so the tokenization method. This means investors can buy digital tokens that acts like small ownership shares in the resort while it is still being built. It is one of the first large luxury projects to offer this type of investment to the public. The project is part of a bigger partnership between Trump and DappRadar, covering at least 8 developments across the Middle East, including Oman, Qatar, and the UAE. So if you guys didn't know about this, like LWA and turning real estates into on-chain, okay, I'll give you guys some simple explanation and the context how it works. So LWA like turns the real world assets like property into digital tokens on a blockchain. As for the Maldives project, how it works is that investors would buy tokens that represent a small share of the resort or even income from the villas. Smart contracts would then handle payouts or the money payout, profit sharing, or rental income. Then tokens can be traded anytime, so investors are not stuck like a normal property deal. The tokens will likely follow US security rules to stay legal, and because it's backed by the Trump family. This makes it easier for small investors worldwide to join. Someone could own a piece of a $300 million resort with just a few $100. So that's the idea here. And LWA is a really a real trend and real narrative that's going to stay, and I have strong conviction. It's one of the strongest growing parts of crypto because they lower the entry cost for expensive assets. They offer 24/7 trading, unlike normal real estate, and they make stable returns like the rental income with crypto technology. And other reason I have conviction for this narrative, so the whole LWA sector, is that BlackRock is in as well. They have this bit of one, so securitized. So BlackRock is actively pushing the LWA adoption, the LWA narratives. So it makes sense to actually look into the LWA sector. And as for BlackRock, it's looking really good. So BlackRock, if you didn't know already, so this Biddle fund is now the world's largest tokenized asset fund. it turns the US treasuries into blockchain tokens. So right now they have the TVL of $2.8 billion. It's actually up only. Like, look at this chart. Like, we went from $500 million, so that is July last year, and right now TVL is sitting at $2.8 billion, despite the market crash. So this thing is real, and it's generating yield as well. It's around 5% because of the treasuries. So this thing is like they accept it as collateral on Binance. It runs on Ethereum and BNB chain. Like, this does really shows RWA can succeed in huge scale when the asset is stable and regulated. So the bit of fund focus on the treasury. So treasury side of things is of course stable. If you actually compare that with Donald Trump's idea, Trump idea, because it's the entire family. So Trump's Maldives project is a lot riskier because it is real estate development, but the potential returns are higher. So like Maldives, like one risk about Maldives is that it's very vulnerable to tourism downturns or climate risk. I have seen comments, like negative comments on crypto Twitter, saying that Maldives might be like under a lot of climate risk and could be underwater. So this has been going around for very long time. But despite this, the crypto community see this as a major RWA milestone. And right now, we kind of like eyeing very closely how well Donald Trump managed to turn that into profit. So it's a big risk. Like, this project is both a business move and a political move. It pushes RWA into the mainstream, gives Donald Trump the organization, new financing channels, and test how far tokenized real estate can go under a pro-crypto administration. It could be a big win or a high-risk experiment, but one thing for clear is that RWAs are entering the spotlight, and this Maldives resort might become one of the most talked about case studies in the sector. So let's see how it plays out, but it's going to take years before we have more development. So let's move on to the last news of today. That's another negative news. There's so many bad news today. All right, so DappRadar, as I mentioned in the beginning of the show, they just shut down, and the news broke yesterday. This is just one of the biggest blockchain analytics platforms. So they have been running around for 7 years. The announcement came through yesterday on Twitter. So the co-founders are saying that like after 7 years, it's time to say goodbye. And the main reasons was financial problems. They tried different ways to keep their company alive, but the current crypto market made it impossible to continue because like we were looking at the TA and we know the market is not doing so well. The shutdown, it will happen step by step, like the Dab and blockchain tracking will slowly stop. Other services will close over time. The update about the DAO on the Radar token will come later. But the timing wise is rough because like crypto market has lost like more than $1 trillion in value in just like 5 weeks, and Bitcoin dropped below $90,000 around the same time. The Radar token, of course, crashed massively. So here we're looking at the 7-day crash, like 46%. Looks like it's not going to bounce back. Yeah, so DappRadar's closure joins a long list of 2025 Web3 shutdowns. So I'm not sure if you guys use any of these platforms. For example, another one shut down this year, we have X2Y2 being the NFT marketplace. And second example I could give it to you is Mango Markets, which is a DeFi protocol on Solana. So this actually reflects a bigger issue, like the bigger industry trend, which is consolidation as a FIFO mode. So DappRadar, as I mentioned, I actually used that quite a lot when I was doing my NFT and my degen time, because I have my degen time as well. So this project founded in 2018 and is known as the world's Dapp store. It tracked and organized data from over 90 blockchains. And the key features include like Dapp ranking, so look at the users' numbers, volume, activity, etc. And of course, it looks at NFTs, so NFT analytics, look at the top collections, sales trends, and they also have DeFi data. And the native token, of course, is not doing so well. It was launched back in 2021 for governance and premium tools. So DappRadar, it was once the go-to data source during the NFT boom, during the DeFi summer, during the multi-chain growth. Like they actually have millions of users and builders and investors rely on it. This is the shutdown of DappRadar. It was shocking and it's very significant. Like it shows deeper issues in the Web3 community. Like if a 7-year-old OG platform cannot survive this market, it signals that the bear market this cycle is hitting harder than unusual. And like even established brands like DappRadar are struggling. That means the funding models in Web3 are seriously broken. Like there's something wrong with the Web3 funding models. So DappRadar DappRadar's fall highlights several trends in this cycle. So for crypto projects, there's actually a very high failure rate. Over 90% of crypto projects will eventually die, and I have seen that multiple times with my own eyes. And people kind of don't trust Web3 money anymore because like the failure rate is just so high. And this cycle, since that retails aren't back, NFT and DeFi volume is full, so we witness a drop in the activity. We witness the drop in revenues, and analytic platforms lose their businesses. So looks like only the projects with real revenue, with strong institutional partners, would survive than pure Web3 native startup, pure Web3 projects. Because like, if you honestly ask me, would I still have faith in crypto projects after seeing multiple failures? Like, I don't have much conviction because I have seen too much volatility or tokens crash like this. And I witnessed a 2021 cycle, billions lost in hacks. And right now we have a 7-year factoring shutting down. And crypto projects like the Web3 money, I just feel like sometimes the projects don't really know what they're doing. And only 1 in 1,000 crypto startups might actually succeed. Like Hyperliquid is a really good example. It's doing really well. It's generating significant revenue. It's basically really crazy, but like it's 1 in 1,000. And it's very difficult for me to choose a Web3 startup that is that 1 in 1,000. So right now I tend to believe in Web2 money coming into the Web3 world. Because the reason why I have more conviction for that is that okay, I know they're not gonna rug-pull. Because like I've witnessed so many rug-pulls in my whole life, in my life in crypto. So Web2 coming into Web3, at least they have some cash reserves. Like otherwise, why would they start a Web3 project, right? So at least they have a little bit of buffer room. They have some money to invest instead of just a pure Web3 native projects. And from a Web2 mentality, they have experience with servers, with regulations, with global users. Instead of a Web3 platforms like often struggle with this, like because we are Web3 people, like why do we know anything about compliance, right? And then even when it comes to the user adoption, like those people would tend to trust a Web2 interface a lot more compared to a decentralized one because like honestly, the first time when I went to Uniswap, I thought it was some scam link. Like it doesn't like legit at all. So I'm sure a lot of people like outside crypto would feel the same, just like when I first entered crypto. So what happens next after we saw this news? Like of course is it's a little bit heartbreaking because I used that as well. Well, the tools are gonna slightly stop. So it's gonna stop gradually. They're slightly not gonna have any updates. Website, of course, is still on right now, but likely will go offline or redirect very soon. As for the Radar token, the price collapse and future updates will come from the DAO, but most holders actually don't have much conviction, and I do expect very limited recovery from here. All right, so I do want to focus on the bigger challenges for Web3 projects, and Web3 projects are really struggling in 2025 due to financial pressure, like the server costs are too high, revenue from ads or paid tools fall when user activity drops, and the markets are not returning. Like we know, the volume is crashing, user numbers shrank. So, final take here is that okay, DappRadar shutdown is more than a single company failure. It's actually a warning sign for the entire industry. It shows that Web3 still struggle with business models. The bear market is forcing hard resets, and sustainability and real revenue matter more than ever. The next winner, as I mentioned, like we know Donald Trump is getting in, so the next winner might be in RWA or in AI or some hybrid models between Web3 and Web2 that have a consistent cash flow, like a strong real world demand. So that's what I see. Well, anyways, that is a lot of data. That is so much to cover in this show. But like last call to action, make sure to go give us a follow on Twitter. So my personal Twitter account is jamjamcrypto_io. Make sure you have _io because like one of my friends, if we scroll down, digital asset news, he's actually he's a really nice person. I did a live stream with him, I think like 3 months ago. And he only found out recently that my original Twitter, being Jamdram Crypto, was hacked. And what happened was that the hacked account go ahead and sent a DM to my friend from Digital Asset News, so to Rob, that going to send a link to do this live stream, and it looks like a StreamYard, but of course it's not the legit StreamYard. So the hacker was trying to scam my friend's money, but luckily Rob is experienced enough and could smell something was wrong. So he ended up doing an episode about this, and I told him that my ex account was hacked. So please be very careful. Like one thing I still don't understand Twitter, is that even if I go to Grok right now and ask Grok who is Jamie Wong, like Grok would know that my original account, so Jam Crypto, was hacked. Yet Twitter is not taking down the account, because like the last thing I want is the hacker go ahead and message my followers or my friends to scam more money, because that's what they did to me. That was back in August, so late August. So just be very careful with that. Again, scammers and hackers are everywhere. Please protect your valuable, your precious digital asset at all times. Use a cold wallet. Like I'm using a Tangem. I have a Tangem ring here. So if you guys are curious, want to check out how to use a Tangem ring, go ahead to Jam Crypto, my YouTube channel, because I have a few review videos on the Tangem wallets. So please be careful. Scammers are everywhere. And if you want my regular updates, because like I tweet quite a lot, so if you want more regular updates from me, make sure to follow jamcrypto_io, and make sure to follow Roxum TV as well, because Roxum TV is updating every half an hour. We don't only cover Bitcoin news, but we cover like global news, We cover like macro, we cover AI. So there's a lot of valuable content you don't want to miss out. So go ahead and follow us on Twitter, being Roxham TV as well. So anyways, as my show on Roxham TV is from Monday to Friday, 3 a.m. Eastern Time to 3 a.m. Eastern Time to 4:30 a.m. Eastern Time. If you don't manage to catch it live, that's okay. The replay is also available on both Jam Crypto YouTube channel and also on Roxham TV YouTube channel. So thank you so much, guys, for watching, and hang in tight. I'll see you guys in tomorrow's show.